Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Tuesday, April 4th, 2023. Again, we continue to see a little bit of downside follow through today. And so I just want to update the counts remain the same. I am continuing to look for some additional upside, even with today's little bit of a decline. But I am still looking for upside. So let's just kind of jump in. Let me just kind of pop out here to the 4-hour chart, and we can kind of go over where we are right in here. Again, the A, the B, we're in a C wave going up, and that should then bring about a completion point for that primary A wave. So that's a pretty big move. And as I have been discussing, the potential remains for the market to come flying off of this expected high in the start of a primary C wave down. So again, I am continuing to look at a little bit, it's still within the bigger picture, for a stronger decline that's going to take us below the October lows. So I don't think that we're in a new bull market. I actually think we're still in a bear market. We're just in a counter trend rally. So it's a counter trend move, and I'll move it out to the daily. We can see this all remains in play. There's the primary A. We get an ABC A, B, C of intermediate degree to form primary wave B. So we continue to look for, we got a pretty close, we're getting up there. Does the probability or potential still exist that we might get up to 13,994? Yes, actually, it does still exist. I am not by any means saying that's where the market's going to go. Only the market's going to tell us where it's going to go. I just put together what I believe a picture would include. The technical picture includes that type of a move. It may only get to 13,529 and be finished. So in other words, we get a 1, 2, 3, we get a fourth wave, we get the fifth wave, and we're done. I put a C up there, and we start looking for all the levels to be rejected and the market to start the next segment of the decline. So again, you might want to balance that against, like, well, how's that going to happen? Pretty much for the same reason the market thinks it can rally right now. It's going to be a narrative. It's going to be a shock to the market. It's going to be something that's going to reverse this thinking of what we're in now, this thinking of like, well, we always go up because it's earnings. That all will change. But then I think also what will be changing is how the options markets, which do have control right now, it's how the options are trading. It's where the open interest builds. It's how those options, what happens to them as the markets go up and down in terms of the position, and how that then what happens in the options positions converts into what a trader may or may not need to do within the underlying. And that will produce movement in the indexes, in the underlying, which will produce movement in the indexes, etc. Add to that just all the additional news that we have all on the additional news on the underlying stocks that do form the ETFs and the indexes. And you've got the makings of the craziness that we continue to see in the market, the volatility, not as measured by the VIX, by the way, but as measured by the speed, the volatility, the speed, how quickly these moves are happening, how quickly they shift and move from buy to sell. And that presents a very confusing situation as a trader, because we're trying to follow a signal. We're trying to follow, well, what direction is the market going? And if we believe the market should be going up, but suddenly it does a nose turn, it turns on a dime and does a nosedive lower, you're like, wow. And that could really be costly if you're trading and you're trading in the futures, or even if you're trading in a stock and it suddenly finds a bunch of sellers and they knock it down, or the whole mood changes and they knock it down. So again, it's the ability to just kind of read what we're seeing, have an idea of what the expectation should be. Now, as I discussed last night, and I'm going to go immediately back down to the hourly chart, I felt that we needed to complete a fourth wave. And so I thought, well, that could have been it right there. We start to go up, and then we follow through, get up to the next level, stop and turn and break this whole pattern. How? Because it gets left as a three wave. Now, I then have to go, well, okay, it can't be three, and that's completing the whole move, right? So from here, here's the end of the wave four. I'm in a fifth wave. 1, 2, 3, and here we go into the four. How does that count out? A, B, C. So again, what we're seeing, even with the new high for the sequence, we're seeing irregular wave patterns, and they're falling within irregular B. So it's either a B wave within a wave 2 or B wave within a wave 4. We're seeing a lot of them. We're seeing patterns that are not necessarily making sense, but once I can count the whole thing out, it is turning out to be corrective. This was impulsive, but it should be. It's a fifth wave, and it's in a counter trend fashion, which points up. So now we're just tracking it to its completion point, and it's not done yet. As difficult as that can be, trading this today when you're thinking we still have room to go up, so it could turn at any moment and run up. And then at the very end of the day, although you can't see it as much here, at the very end of the day, the market right there, right up into the close, rallied, and then they picked it up and they rallied strongly. That's 13,167. This is 13,225. So you got 30 plus 25, it rallied $55, likely within 30 minutes. That's just a go and go. If I look at the S&P, which I will in a minute, it did the same thing. Came from the lows, ran all the way back up to get the close they needed to see. This is the way the markets are trading. Whether you want to believe it or whether you want to call it nonsense, whatever, that's fine. But this is the way the markets are trading right now. So either we have to accept it, get along with it, get in there and be able to do what we need to do because we have a money goal, and stop letting the market steal it back from you. It's like you got to play along. You got to do the best we can. So for tomorrow, we still may see a little bit more of a drift lower. We need to kind of put in another smaller move, but still below 13,155. We may drop all the way back down to here, but I don't think so. I think we will run into support right around this level right here, 13,140-ish, plus or minus. But we just need to finish this C wave to finish this fourth wave. So whether it does it or not, because I may have to consider it a small failure and that it didn't come down and take out these lows to finish the C wave. So does it have to? No. Should it? Yes. Would I like it to? Yes. So again, what we're looking for here is a completion of the four and then for the rally to pick up again. Now, once that rally does pick up again, what are we looking at? Right, bring that back up to here. And because that would be the four, I can come all the way back down and just do a 3. Oops. Let me put up the right tool. Just to give you an estimate. So I'm going to run it from the start of 3 up to the top of 3. And then I'll bring it down and let's just, right now, I'll just stick it to where that 4 is. So you can see what I got is now the extensions. And again, open this up so I can pull it apart, bring it back down. Wave 5 would be equal to 6.618 of wave 3 at 13,447. Is that possible? Very, very much so. Wave 5 would be equal to wave 3 at 13,620. Is that possible? Yeah, The Fibonacci numbers are telling you it's possible. The market itself may tell us, well, yeah, it's very possible by putting in that kind of a rally. 1.618, you can see 13,904. Is that possible? Yes. The fibs are telling us it's possible. So technically, the market has the potential to get itself up there. Probability base might be something totally different. So tomorrow, we will have a few more. We have the ADP employment. We have the US trade balance. And then we have the S&P final, US Services, the PMI, and then we have ISM services. So we have 4 that are going to can move a market. The one that may really do it before we even get started is the ADP employment. That comes out at 8:15 a.m. 8:30 US trade balance, 9:45 we have the S&P final, US Services PMI, 10 a.m. we have the ISM, all of them. But the ADP, because what really got the market going to the downside today was the job openings. Now, because the market's always going to constantly focus on employment, which, by the way, we have the employment situation, which used to be called the non-farm payrolls, which has a lot of other names, but that's when we get an overview of the employment situation for the month of March. Now, it's not a federal holiday, but it is a market holiday, and that's coming out on Friday morning at 8:30 a.m. Eastern. And the markets will be closed. The Globex session will be open. So, if you want to come in and trade, it'll be there. So in advance of that number, we have the jobs report that we got today. And then we have the ADP job report tomorrow morning. The market, I believe, will start reacting more to that in advance of not being available on Friday. So we could see some continued downside. So again, while I'm looking for a little bit more tomorrow, if they're really not going to like that report and we start sinking, then I will likely have to decide what all this really was. And did this really break down to 1, 2, and then I got a 3 and a 4 and a 5 in here somewhere, right? I don't know. Let me just take it down to a 15. Sometimes that's what counts. Getting it all the way down, I don't really see it. We got this, this, and this. So that was A, B, and then we get the nice C wave. So that's why I'm counting it as an ABC down to complete this very strange 4th wave. And that's on the 15-minute. It's just been a bizarre trading market in terms of the patterns that it's creating. That doesn't really help with trying to figure out what's coming next. It adds another challenge to the analyst. But I do the best I can in keeping with account. If this turns, and as I've been saying, in terms of did it finish a strange triangle pattern, which it may have in the S&P, then I would be expecting it to continue to reject these levels, reject these upper levels, and start to drop. It hasn't really done that, which keeps open that potential that, well, we're not done going up yet. They're not rejecting. Even after getting a number that presents a little bit more negative a picture, they're not rejecting. They're continuing to stand and buy for whatever their reasons are. So that may continue as well. As a trader, it's truly up to us to conform how we choose to trade to what the market is actually doing. The market's never going to conform to my analysis. That would make us all real rich real quick now, wouldn't it? We just have to walk in and say, well, that's what they're going to follow what he said. Boom, I'm going to buy it. But that's not going to happen. Let's be realistic. But what I am attempting to do, folks, is I am just attempting to give some parameters for if the market's going to go down or if the market's going to go up. Since I'm thinking that we got a little bit more downside and then we're reversing head higher, on one hand, I'm thinking, well, whatever that ADP report's going to be, they're going to like it. Because I'm expecting it to boost itself and to get up towards 13,500. It's at 13,200. That's a 300-point rally. How's it going to do that if we get negative news? Likely not. So again, be flexible. Let the market tell you instead of me trying to tell the market. That means we all need to be a little bit more fluid, a little bit more loose, a little bit more willing to just do what we see, take the signals that we see. All right, so that would be here in the NASDAQ. Taking a look at the moving averages on the hourly, they're all pretty much still in line. The 50 that got all caught up in this mess this afternoon, and that may continue. Let me see if I can get this open here a little bit. Bring it down a little bit. You can see, all right, it's trading up. It's above it, but if we get back below it, should throw a little bit of negativity. So we got that going on. These are reacting and they're coming lower, but if they can get it going to the upside, that'll revert and start higher again. 200s, they're kind of just taking their time, coming up. So still basically in alignment to kind of go ahead and continue the upside, but it is looking like it's getting tired. Now here in the S&P, we did get up to that 4171 area. And that was overnight in the Globex session. Now, I want to take this one back out to the daily. And if I'm going to be looking at that triangle pattern, which I did take off just so that I could see my charts. But if I had to put that back on, it is on the nose, right there. Just so I can show you, I will put it back up. I'm going to go down here, right there. Look where it came in. Hit the support, didn't go up and go through, which would have been about 4185, 4190. Now we're doing a 4. We may still come back up in a 5. So again, even in the S&P, this best counts as 1, 2, 1, 2, 3, 4. I will give it, or I get it with the 3 and the 4, and this is the 5 of only 3. So I will put up there for us, as extended as this is what I believe it did. As extended as it is, as much as many of us want the market to start to come down, doesn't appear that it's ready. Getting close. When we see sellers come in, they do come in with a little bit of vengeance. They hit it. They take it on down. We saw a lot of just dumping out today, but it stopped. It comes back. It stops. It comes back. And they did it again today. They brought it back up at the end of the day. There's where it was. They needed it at 25. In fact, they wanted it at 30, and they got 30. They protected 25 and gave it that extra $5. It's all in the 0 DTE, the 0 days to expiration. It's those options, and they'll do it day in and day out, and they don't really care if you believe it or not. That's where the money is, and that's where they're pushing, and that's all that counts to them. So what could this be? A little A, a little B, we come in a C. Maybe that additional C wave, if it's going to come in, gets down to 4098, 4096 area, basis the ES. That's going to be about 4065-ish to 70 in the SPX. Pay attention if you got access to the options. Pay attention to where the open interest and then the volume on the day of expiration. It's the volume in that particular strike. Not necessarily the open interest, but the volume. It will be the open interest when I'm looking today. Those are done. I come out to here. So, let me change that back. So I'm looking at open interest. And I got to bring it down to where's the market trading? 41.30. I come down to here. Where's my open interest? Well, right now, 41.50. That's on basis on the S&P. So in the SPX, we go back and now we can go and look at that. And I also check the puts. You can see puts are not trading. Puts are not trading. But if I look at the open interest, 4,100. Wow. Okay. Or 41.50. So we got the 150 line, the 4150 line. And in the SPX, it's going to, not the SPZ. Let's go to the SPX. It's going to equate out as 4120. Look at that. 4125, 4120. That's where the puts are. Ooh, look at that. 4150 is for tomorrow. For tomorrow. 4150 is where the calls are. Now, 4150 would equal 4190 in the EX. So we're all wondering, how could this market go up? It looks like they were done. They came down all the way today. It's like, we're there. I'm looking right there. Again, I'll approach without the bias, but I'm telling you right now, 4130, 4140, 4150. So either somebody's put on a butterfly or they're building to this is the ranges that they're thinking for tomorrow. So here we have it. And that's what I work with. Now, back over to the ES. Minute 4. Comes down to here, and then they begin to rally. Now, I have to tell you, they would need to get it all the way back up into here, or all the way back up towards 4150 here, for it to even equal 4120 in the SPX. Now we're looking at the put. All right, that's where the big put level was. Call level was 4150. That would say that we get it back up to here and move to new highs tomorrow. Could we have a 60-point rally in the S&P tomorrow? We can. Can it be 100 or 90-point rally in the S&P tomorrow? If it comes down to here, yes, we can, and it can happen. Would I expect it? What do I expect does not matter. Seriously, it doesn't matter. Staying open to the potential and the possibilities does. It allows me to trade. It allows me to attempt to go on with the market. If they're going to be clean and smooth like they were, and not all of them, but a lot of these, it was straight up. If we walk in and it's like straight up, fine. Why fight it? Excuse me. We can take a contrarian view, which is going to make you sell it while they're pushing higher. And then you're going to be angry because it's like, damn, they won't turn. And damn, it's not going to turn. It's like, nope, we're already saying. And I'm going to be checking the SPX and the ES options that expire tomorrow for my hints as to where are they directing this market that they want it to go. You will get the clues all day long. And as you get closer to expiration, you're going to see where they may push it until they finally get their way. Late in the day today, it didn't look like 4125 was going to make it. I could see it all day, but they were moving it lower, and then suddenly right there, 20 minutes before the close, bing, 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 boom. And by the time it did close, it was above 125. They pushed it a little bit further to 4130, just for good measure. So that's our pictures for today and for tomorrow, I mean. Moving averages here, same deal. Kind of cresting a little bit. The 40's gotten flat. The 200 looks like it wants to get flat. The 20's angling lower. Kind of leaves open the door that we can drop and then maybe rally. So it wouldn't take much if they drop and they rally strongly that these will turn and follow. All right, that's where I'm going to leave it. It has been crazy, folks. The bond market's also volatile. Gold, by the way, gold closing well above 2,000. In fact, it got up to 2,043, holding those gains as we start the Globex session. Gold. That's a message that needs to be told. Why are they buying gold? Why is that so important? Primarily, it's been central banks. What do they know that we don't know? What's going on? Do a little investigation. It gets to be very, very interesting in the time frames that we live. There are a lot of interesting things going on. And eventually, it all will come home to roost. All will be known. And again, as I've been talking, I think the ultimate outcome of what happens here, whether it's going to be at 4176 or it's going to be at 4300 here in the ES, the next move is a shock to the market. It will be a sudden and very strong drop. That would be the start of a primary degree C wave in the direction of the trend, which is down. I'm going to leave it right there. Our next update will be on Wednesday, April the 5th.